So might Tesla stock be set for a major jump like a slingshot? This seems to be the pattern if you look at how the stock has behaved over the last 14 years since its IPO. Today, we're going to review Tesla's stock movement pattern, what to expect for 2024, and more importantly, we'll review the most compelling chart that investors need to be following, the market expectations for the federal fund rate, and we'll explain why. So today we have Larry Goldberg with us. He's a long-term investor in Tesla. He's a multi-entrepreneur. Thank you so much, Larry. Appreciate you joining me.
Thank you for having me, Herbert.
So you've been following the IPO from the Tesla for quite a long time now. And obviously the economy is one of the things you're very closely following. So has Gary Black. So let me start off with his tweet. He says, probably the most compelling chart for investors to buy Tesla. Okay? Lower interest rates provide double benefit for Tesla. So this is the federal fund rate that's falling here. This is the expectation. We'll look at it closely. But basically, he's saying that there's multiple benefits if the interest rates fall, specifically for Tesla stock. One is it reduces the chance that Tesla will need to continue cutting EV prices again. Interest rates impact the monthly payments that car buyers need to put in. Part of the reason why they had to cut prices to be able to reduce that. If this is reduced, then Tesla can even maybe raise prices. And then obviously, as interest rates fall, maybe we're heading into a boom market. Long duration stocks benefit most. This is the growth markets, and then money will start flowing again to the growth things. So what's your thinking about this potential here? It looks like the 2023. Here we are, the left, and it looks like that this federal fund rate is looking for the first cut to happen in April, and then continuously down till December 24th next year. That's how we're going to see this cut, and even further the following years, big time cuts. Some people are even calling for cuts happening now in December 23. Yeah. So what's your thoughts on this concept?
You know, there are multiple different factors that affect the stock price. And interest rates are a very important factor. But interest rates drop for multiple reasons. And one of the reasons is dramatically slowing economic activity. And when economic activity slows, very often stock prices go down. So when you have multi-factor impacts, it's impossible to look at the one factor as a controlling factor. Now, interest rates are very important, I agree. But interest rates declining in a declining economic climate does not mean that growth stocks are going to climb. Sometimes it means they're going to decline very sharply. So I would say that when we look at these factors, we should not focus too tightly on a single factor. I personally think that we're in for a rough ride next year economically. And so I think that in general, vehicle sales are going to be flat, if not in decline. And so I think that stock prices are going to be, even for growth stocks, are going to be pretty low growth for next year, except for AI stocks. And I would put Tesla and NVIDIA, Microsoft, as the three leading contenders to go against the grain of where the market's going. So I'm very negative about the market next year, but quite positive about Tesla. But as to a very rapid rise, one of the historic jumps in the Tesla stock price, not so much.
Okay, that's fair. I just did a show, though, very recently about a number of people now who are saying that they're expecting a boom next year because of several reasons. One is that we've been in a recession for the last several years. You're correct, though. Elon is still predicting maybe that's going to be a soft landing, maybe a recession next year. So that's not off the table. But the AI boom is real. It's coming into place. And then the other thing is that there's a short seller squeeze for the ages. So as now we're turning, and usually they say that the short seller when they get squeezed and they get out of the playing field, that sets it up for the boom. And then finally, there's all this money that's sitting in the sidelines that's been sitting for many years now, and they're ready to come in, and that could explain maybe economic boom. So, but like you said, Tesla is a bit of a different animal. They're an automaker, so they're going to be affected by that, but they're also an AI play, and so maybe it's hard to say, right?
Yeah, a lot depends on the timing and the announcements about the timing in connection with firstly the robot. I mean, that I think is a very, very important moment.
Yeah.
The timing of FSD, those are going to be very important moments as well. How well the new version of FSD does. I think there are going to be a few bumps in the road before it really shows its mettle. And then, above and beyond that is announcements or some indication of what's happening to the 25K car. If you take those three controlling elements, that's going to decide the direction of the Tesla stock and how rapid it rises. The economic decline early next year, particularly in China, is going to have an impact across the markets as such and will influence Tesla stock. But those three Tesla-specific issues are going to really determine when and to what degree Tesla departs from the rest of the market. That's my view. Anyway.
Yeah, that's a very good point. I agree completely there. So let's take a quick look here at other charts. I'm going to get right into Tesla stock, specifically how it's been moving. But in the meantime, let's look at the Mag 7. So this is a chart showing the forward PE ratio for the Magnificent 7. And currently it's slightly below average going back to 2015. Now, even though they say it's below average, right, from 2015, but yeah, you can see that there's, this big giant swings here. That's probably an artificial jump. But it also kind of says that maybe, you can look at this as you can look at it as a pessimistic look, that this was just like you saying this is just an artificial kind of thing. But it also could mean that, hey, if the AI boom is real, then the PE ratios are kind of, fairly valued now, and it could still go up. What's your thinking? Like for me, I'm going, this is more likely to go up than it might be going down.
I think it's likely to go sideways. I take these charts with a pinch of salt. Firstly, this chart is very limited in terms of time.
Yeah.
And the time, so if you go from 2015 to 2020, you're looking at an artificially low rate of interest, incredibly low rate of interest, historically low rate of interest, going back to, the turn of the 20th century. So I don't regard this as, that valid. And then the peak was clearly the pandemic peak, when everybody had huge cash balances, unprecedented cash balances in their bank. So by and large, what you're looking at is an artificial chart. And if you go back another 10 years, things would be very different. But then, of course, there wasn't such a thing as the Magnificent Seven. So I don't think that looking at this chart is telling us much of anything. Now, the AI boom is real. It's going to have a huge impact. There's going to be swings and roundabouts on that. There's going to be, it's not so good anymore. Things aren't really happening. And then suddenly it really happens. These are very difficult to predict moments of, stock market reflecting real economy and so on and so forth. But I would say that, investing in valid AI stocks are a really good play. And I think that, NVIDIA clearly is one of those. Tesla is clearly one of those. Microsoft clearly one of those. Microsoft, by the way, is the big winner of this whole brouhaha over, OpenAI, which, it's almost an unbelievable failure in board governance, unbelievable failure, one of the failures of the century. And it points to this idea of, filling boards with people who are filled with missions that are exogenous to the companies. true mission.
Okay, wonderful. So this next segment here, let's take a look at Tesla stock. And I actually don't believe so much in stock astrology, looking at the movements, but I think if we'll talk about it right after we see the stock movement. I think that it speaks to kind of how Tesla is continuing to build fundamentals, inventing innovation while the stock follows, and then eventually catches up. That I believe. But let's take a look at how Tesla stock has moved over the ages. So this is the entire trading history of Tesla stock since IPO in 2010. And if you look at this, you can see that, okay, it was kind of flat for so long, and then there was a massive jump. Then it was flat, then a jump, flat, jump. Now it's actually a decline. Now, does this mean that it's going to jump now or whatever? Who knows? But that's sort of the typical pattern that we're looking here. I just did it much more cleaner here from, just looking at the entire history of Tesla stock, really flat for many, many years. Just a bump here, of course, it looks significant then, but then massive jump, massive fall. And now we're kind of like in this up and down period. And again, like you said, it's all affected by economy, market, interest rates, all these things. And, what's happened. This is the last 5 years, since 2019, just to be, very, very volatile. And then here's another look at this. So you can see that, fell, jumps, and now we're long period of falling. Maybe we're ready for another jump. What's interesting is Elon's own evaluation. So he tweeted this out on April of this year. And he said, there have been several extended periods of flatness followed by rapid rises to new plateaus. And then Jason DeBolt said that was basically flat. Tesla was basically flat for 10 out of 13 years since IPO. 2010 to 2013, 2014, 2019, 2020, 23. The majority of the 126x returns in Tesla happened in just 3 years out of the 13 years. 2013, 2019, 2020. So that's kind of a pattern. And only in a few weeks of those years. This is why you cannot be trading in and out of the stock, because you'll miss one of the breakout days that provide the most returns.
That remark by Jason, could you put it back on the screen, please?
Yeah.
That is the wisest thing. I mean, Jason is a very wise guy. And, I don't necessarily agree with all that he says, and sometimes I disagree with him quite strongly, but I have a lot of respect for the guy. And that's the wisest piece of advice I've seen on Tesla stock for a long, long time. If you don't own Tesla stock and maintain your ownership of Tesla stock, and if you trade in and out of Tesla stock, you are making a huge mistake. If you want to invest in Tesla, buy the stock, put it away, and stop worrying about the stock price on a day-to-day basis. Because you're right. There are times where it spurts when there's a whole realization by the market of what is happening in Tesla. And it's unpredictable when that happens. I know your charts show these jumps, and it's very hard to really derive from those stocks a pattern for the future, because Tesla's inventions and Tesla's developments and Tesla's foray into new markets, all of these things are happening at different periods of time and in different speeds. So it's really impossible to say, yep, it's going to happen at that point. But what is possible to say, what should be possible to derive is, yes, it is going to happen. So Jason's right. Hold the stock, put it away. This is not stock advice. This is not advice. This is just my reading of, the best way to hold, to derive benefit out of Tesla's amazing inventiveness.
Yeah. So you and I are both long-term investors. We believe very much that we have the same philosophy. We don't trade. You might do some of it, but basically it's like, buy a chunk, hold on to it for long term. Okay. The complaint about Tesla stock is very, very volatile. It goes up, it goes down, it gets affected by interest rates.
Mm-hmm. That makes it a very interesting stock to trade. And I
Yeah.
would separate the trading of Tesla stock from the investment in Tesla stock. Two different animals entirely.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com. Yes, that's why some people can be successful in trading Tesla stock.
Yes.
But like you say, it's hard to know because it is affected by these, daily the interest rates affect the car sales. But what I look at as a product manager, as a company owner, and you're a company owner, is I look at the company Tesla and I see that every single day that goes by, there is movement, there's progress forward with innovation, with factories being built, with a new car being released. It might be late, but they have then countered that with inventions like FSD or the bot and the energy. So as these continue and the stock falls, like people make fun of my chart, my milestone table of 2022. And they go, look at your 2022 chart. You list out all the milestones and look at the stock. It fell. And so they're going, see, there's no correlation. And then I go, okay, well, let's take a look at the 2003 to 2021 chart. And you can see that the stock skyrocketed.
Right.
So in 2022, it fell, but all those milestones did happen. And here we are in 2023. We've got the legacy auto manufacturers capitulating. So competition has not come in 2023 and it's not likely to come in 2024. In the meantime, Tesla's continuing to hit these milestones. Stock could still fall, absolutely. But at some point, you'll be recognized for the bot, you'll be recognized for energy, you'll be recognized for AI, you'll be recognized for FSD. These things will happen, then it'll do the jump.
Absolutely
because it's re-rated as a new kind of company. Right now, it's an auto company. At some point, it's going to be re-rated as a new company. Now, like you said, we don't know when, but if they continue to make movement, like are they still progressing? If they falter, like the delay in a Cybertruck, absolutely, that's a concern. A delay in a Model 2, maybe they can't build new factories. Those things matter. Maybe they fail in some new technology, but at the end of the day, what we're seeing is continued progress, and things are still looking quite good in all these aspects. So.
Yeah, there's a lot of impatience by Tesla investors on Tesla milestones. And that results in predictions that are always too early. And, I understand it. I want to see the 25K car roll out of the factory tomorrow.
Yeah. Yeah.
I want to see an announcement. All of these things are true. But, if you compare Tesla to any of the other car companies, you get a sense of just how much they've sped the process. So, and the truth is there's been a pandemic, which has really, made life very difficult. I mean, I have spoken to some Tesla folks that told me some war stories of what they went through to maintain their supply chains in the pandemic. And it really, it's amazing what they were able to do. So I agree with you. If you don't hold Tesla stock and you intend to buy it, and one day you wake up and the stock has climbed by 5x or 10x, that's on you.
Mm-hmm. Okay. It seems to be the pattern. Don't know if that's going to hold, but I think the reason why that's the pattern is because they keep innovating. And then at some point that innovation becomes recognized.
Right.
Awesome. Thank you so much, Larry. Follow him on X at Tesla Larry. He has quite regularly, he does some deep dive, great tweets and posts that he does where he gives you some new analysis. Thank you, Larry. Talk to you soon.